Welcome to Dividend Depot. I'm Chuck, and in this video, I'm going to share with you my process to determine possible future dividend income. If you remember what happened last Thursday, you'll know that there was a broad sell-off across all markets. During that time, my mind started to wander. I was wondering about all those miners out there with their digital pickaxes looking for all that digital gold. I thought about setting up a mining rig with walls and walls of computers, working hard to uncover that buried Bitcoin treasure. I dreamed of Bitcoin falling from the sky. But then my thoughts began to fade as I realized that nothing was coming from above. But then my thoughts began to fade as I realized it's the dividend check I love. Okay, that's as close as I'm going to get to being a poet. For real though, let's talk about dividends. It's the only way I know of getting a return on my investment without selling anything. When I was doing some research, I ran across an article from 2016. I have been trying to find an update to the article, but no luck. The article talks about a well-known company. This company has had some controversy in the past, so I know it's close to everybody, even if it's not close to everyone's heart. The company that I'm talking about is Walmart. In 2016, the IRS stated that Walmart's hometown of Bentonville had the highest reported ordinary dividend income in Arkansas. Bentonville was followed by Little Rock, Fayetteville, El Dorado, Rogers, Arkansas, Hot Springs Village, then Fort Smith. Altogether, these cities took in a total of close to $4 billion in 2016. But there's always a kicker. Bentonville, Arkansas beat out cities like Miami, Palm Beach, Clayton, Grand Rapids, Michigan, Chicago, Illinois, Harrison, New York, Captiva, Florida, Medina, Washington, San Francisco, California. Bentonville, Arkansas received the most dividend income for the entire year of 2016 out of any U.S. city. Bentonville, Arkansas really knows how to get that mailbox money. Okay, let's take a look at a company to understand some basics about dividend income. We have a group of kids that started a company called Kids Lemonade Stand, ticker symbol KLS. They are doing well, but they want to grow faster. This requires capital. They decide to talk to Dad about investing in their company. They show Dad their financial statement. It says that they make $200 million in annual gross profit, which gives them an annual net profit of $20 million. The annual gross profit is the money made from selling goods or services. Annual net profit is the money left over from annual gross profit after you buy more supplies and pay the bills. So Dad likes what he sees. The kids get excited because they understand they're about to get their first investor. After the kids tell Dad they will pay him a 50-cent dividend, he decides to buy 100 shares at $10 each. He gives them the money and then he says he'll return later and see how they're doing. Now Dad is officially a shareholder in KLS. To recap, Dad bought 100 shares. KLS received $1,000 from Dad, 100 times $10 per share. KLS sold shares at $10 each. KLS has 20 million outstanding common shares, and KLS will pay a quarterly dividend of 50 cents per share. Okay, now let's look at earnings per share calculations. A company's earnings per share is equal to annual profit divided by the number of outstanding shares. KLS's earnings per share is $20 million divided by 20,000 outstanding shares, which equals $1 EPS, or $1 earnings per share. Now, to calculate the dividend payout ratio equals the total annual dividend payout divided by the annual net profit, or an easier way would be dividends per share divided by earnings per share. So in this situation where we are using the easier formula, we already know that KLS dividends per share is 50 cents and KLS earnings per share is $1. We would take the 50 cents divided by $1, and that will give us a 0.5 or a 50% payout ratio. For us, this is a good thing because we like companies that pay out less than 50% of their earnings. Now, this does not take into effect that REITs have to pay out majority of their earnings. Okay, so let's take a look at Dad's dividend check. As we can see, Dad is getting a quarterly check, which if you want to calculate it, you would calculate it by multiplying the dividends per share times the number of shares owned. So in Dad's case, this would be 50 cents times 100 shares owned. That will give him a $50 check every quarter. If you want to calculate the annual dividend check, it would be the annual payment times 100 shares, or 50 cents per quarter times 4 quarters times 100 shares. That would give him a yearly payment of $200. So now Dad is able to pocket some cash every quarter without having to sell any of his shares that he bought in the company. He is also making a higher return than he would normally get at a bank. This also helps to battle inflation, which can slowly eat away at the buying power of your money. I think that's a good return on his investment. Okay, so that's it for this video. I'll see you next time. Until then, you know what to do. And to all my dividend family out there, good morning, good afternoon, good evening, or good night.